Hey guys, thanks for tuning in. Before we get started in today's video, don't forget to join our free Facebook community, get real answers to real credit questions, learn from some of the experts in our industry, as well as from other people that are in similar situations that are taking advantage of the free content and improving their credit and making their credit situation better. Hope to see you guys on the inside. So let's take a look at the allegations. So there are three federal agencies that entered into a joint consent order against Trustmark Bank. Those agencies were the DOJ, which is the Department of Justice, the CFPB, which is the Consumer Financial Protection Bureau, and the OCC, which is the Office of Comptroller of Currency. So they entered into the consent order last week, right around Friday, October 22nd. And so these federal agencies are suing and accusing Trustmark Bank of redlining. And their accusation is that Trustmark Bank was avoiding offering and marketing housing loans to the Black and Hispanic community in Memphis, Tennessee specifically. Now, again, we're going to discuss the details of the case, find out if this is true or not, or do we just have some bureaucrats here in government trying to make a quick buck and make themselves look good. Now, first, let's define redlining so we can all be on the same page with what is redlining and maybe what does modern day redlining look like. So this comes from Wikipedia and I'm just going to read it. So redlining is the systematic denial of various services to residents of specific, often racially associated neighborhoods or communities, either explicitly or through the selective raising of prices. So that's the definition from Wikipedia. You can look at Merriam-Webster, take your pick to kind of get an idea of what's the definition of redlining. So redlining historically involved explicit bans on loan offers to customers from majority Black or Hispanic communities. That's what we have grown up to know what redlining was. And which meant that if you were Black or brown or even just in a minority group and you were trying to get a mortgage loan and you were from a certain zip code, you might be declined just based on the fact that you or would have based on where you came from, or also you could have been redlined because you didn't get the education or didn't get marketed to based on the zip code that you were from. So you never really learn about the steps to get a house or to get a mortgage because you didn't have good banks in your community. So that's kind of historically what redlining was. And so, we're going to kind of see how that definition of redlining fit into what Trustmark is doing and see if the feds have a good case against Trustmark Bank. So back to the allegations. So the feds said that between 2014 and 2018, Trustmark avoided locating their branches in majority Black and brown communities. Trustmark had failed to assign a single loan officer to majority Black and Hispanic communities. Trustmark had failed to monitor its compliance with fair lending laws, and Trustmark discouraged home loan applications from Black and brown people. So again, these are the allegations that the feds have made, and of course, whenever they make these allegations and they sue a company, they've done a lot of digging, a lot of research, so that way by the time that they sue, they know they have a good chance if it goes to court that they're going to win. So they try to kind of pin that company into settling. So let's look at some hard evidence here. What did the feds have on Trustmark for them to proceed with a lawsuit against Trustmark Bank? So here's some data. So 50% of the census tracts in Memphis, Tennessee are majority Black and brown. And only 4 out of 25 Trustmark branches were located in the majority Black and brown locations. Okay, so that means about 50% of Memphis, Tennessee is Black and brown. And Trustmark has 25 branches total in Memphis, Tennessee, and only four of them are in these communities. So that means 21 of them of the 25 are in the other 50% non-majority. It doesn't mean there's not any black and brown people in the non-majority. That just means that where the majority black and brown communities are located, there seems to be an imbalance there, where the majority of the branches are located in the non-black and brown majority communities. So based on this, does this solely mean that they're redlining? It looks pretty close. It doesn't look good, but it doesn't look good for Trustmark Bank. But let's continue. And so, based on the redlining definition alone that we read earlier, it's really tough to say that Trustmark Bank was in fact redlining based on that. I mean, they weren't completely avoiding those communities because they did have 4 locations, and we don't really know exactly, why they didn't put more in those communities. Who knows? There could be other details, maybe around real estate costs, or who knows. But the fact that they didn't completely avoid putting any locations in these communities does make a hard case that they were redlining, or were not redlining. But the fact that there is a big imbalance there is questionable to the least. So let's continue on and looking at some other evidence here. So let's look at some other complaints, some other evidence that the feds had against Trustmark Bank. So Trustmark allegedly did not assign mortgage loan officers in those 4 branches. That doesn't look good for Trustmark Bank. So someone from that community, let me kind of tell you how that could be pretty bad and how that could be really considered redlining. Let's say someone from that community, in the majority black and brown communities in Memphis, Tennessee, they walk in, they want to talk about getting a mortgage loan and speak to someone about the home buying process. There's nobody there to help them. So that bank has to basically tell them, sorry, we don't have a mortgage loan officer here. Here is the phone number of another branch, or here's another location. Go to this location. Who knows how far away it was from them. You have to go there to speak to someone, or we can try to have someone come back to you. Keep in mind the banks were pretty much closed off, especially during the pandemic. So I'm pretty sure that was this was before. So I should rather not say that. This was like 2014 to 18. So this is not 2020, 2021. But basically it's an inconvenience to that person in the community to have to go to a different location that's probably far away, or have to make a phone call and may not really get the help that they're looking for. They're going in person for a specific reason. That's probably how they communicate better. And of course these 4 locations did not have an assigned mortgage loan officer in that branch. So is that solely a good reason, for evidence of why, or evidence of redlining? Well, if you look at Trustmark's competitors in that same area, in the black and brown communities, they actually received 2.5 times as many mortgage applications. So you could try to make the claim that, well, we didn't have mortgage loan officers in these locations because the demand really was not there. We don't really get a lot of inquiries, so to speak, about mortgage loans or the home buying procedures. But if you look at the competitors will say different. Well, I mean, we got 2.5 times more applications than Trustmark Bank, and so the feds really did their homework and did some digging there and found that that really wouldn't be a good argument for them to make, based on the fact that their competitors are doing are receiving mortgage applications at 2.5 times the rate that Trustmark is. So it's pretty good defense, or pretty good offense that the feds have there, and that kind of would be the nail in the coffin for Trustmark Bank if they tried to take it to court, or they tried to have a good defense prepared. That's kind of the nail in the coffin for them, which is probably why they end up settling, which we'll talk about that right now. So Trustmark didn't deny the allegations. They didn't say that they're in the right or the feds were wrong. So they didn't really deny these allegations. In fact, they entered into a settlement with these federal agencies. So Trustmark is going to pay $5 million in fines to settle with the DOJ, the CFPB, and the OCC. Now, a little side note there: how bad is this for Trustmark? How bad does it hurt them? Well, Trustmark generates about $150 million per year. In fact, they did $153 million in 2020. So, a $5 million fine is about a week's and a half's worth of revenue. So it does sting to a certain degree, but Trustmark doesn't, by settling, they get a slap on the wrist, they pay a fine, and Trustmark doesn't have to have their name, dragged through the mud, and so they can kind of move on and do whatever they want to do in the banking world. Of course, if they went to court and it went back and forth, it would have picked up a lot of, media. It would have picked up a lot of press, and maybe that would have been a bad image for Trustmark. And so, for them, it's pay the fine, settle with the feds, even if they think that they had a good defense, even if they think that they weren't in the wrong and they had some good, evidence to support that, they weren't redlining. The fact that they settled means that defense probably was not strong enough. And then just kind of looking at it from a profit and loss standpoint, just settling, paying the fine, not having our reputation ruined in the process is probably going to be the better way to go. So that's what ended up happening. In my opinion, there, it looks like they were pretty close. If not, they were in fact redlining. My opinion on that is because the fact that they didn't have a mortgage loan officer present in those locations. I guess their side could be we couldn't find anybody, but if you have them in other branches, you can kind of figure out a way to make it work and put some in those other locations. So I think that's probably again the nail in the coffin for them. They could have probably got away with, hey, we're not completely avoiding these areas. We have 4 in these locations. But by them not putting a single loan officer in those locations, again, in my opinion, I think that kind of seals the deal for the feds. So let's take a look at a statement released from the CEO of Trustmark Bank. So Trustmark CEO is Dwayne A. Dewey. He said in a statement that we fully cooperated with the agencies and have entered into the settlements to avoid the distraction of a protracted litigation, and because we share the common goals of breaking down barriers to home financing and exploring innovative ways to help residents in underserved areas achieve the dream of home ownership. Has a lot of HR, PR kind of spin to it. Hey, say this to the public, so that way you kind of save face there. So again, it kind of goes with what I was projecting there. They end up settling, so that way they don't really want to drag this through court and drag their name through the mud in the process, and then it's like, hey, say this good PR statement, which is we share the common goals of breaking down barriers to home finance. This is kind of like the thing people say these days when they're on the verge of getting canceled. You got to say this, word, soup of words that people like barriers and innovative and underserved, things like that. That's just what a lot of people say to kind of save face and from when they're in the process of being canceled. So, okay, well, it is what it is. They end up settling with the feds. And now let's take a look at the side from the feds. My opinion on that. Was this in fact a good case for the feds? Was there actual, redlining here? And why did the feds actually pursue Trustmark Bank? So again, was Trustmark really redlining here? It does look like it, in my opinion, and gave you my reasons why to a certain degree. Now, were the feds trying to make a quick buck and look good? In my opinion on that, I believe so as well. Because the fine wasn't too much. They didn't really mean to put Trustmark out of business, because if they were hardcore redlining, then the feds would have shut that down, right? But they didn't. So the fine wasn't as severe, the punishment wasn't that drastic, and they do look good to the public because now they have a little head on their mantle that can say, hey, we took down Trustmark Bank. They were, we accused them of redlining. They settled with us, which means they agreed with us. Look at us, we're the good guys. We're on your side. So they look good to the public, but most importantly, they get some cash in the process because again, this is a government agency. They get funded by tax dollars, and of course, whatever they can raise and get from these fines and things like that. So they do need money to stay in operation. Another thing, Trustmark was ordered to pay $3.85 million to subsidize home loans for residents of majority Black, brown communities. So that's another penalty that they have on top of the $5 million fine. And you can kind of see that's what the feds really wanted. They wanted to also bring in some more revenue for their programs or subsidized programs. It's just another tax, if you will, on big business. And a lot of people think that, good for them. them. That means that the big banks are paying and the consumer is not going to pay for that. But the consumer is going to pay to some degree. Trustmark's probably going to raise their rates or raise some fees somewhere. At the end of the day, this always hurts the consumer's pocketbook. I'm not an advocate saying that we shouldn't do anything about it. If there is a bank out there that is redlining or doing something that they shouldn't be doing, there should be some consequences there. But at the end of the day, a lot of these times the consumer ends up floating the bill. They end up paying for it somehow. So that's my opinion on the matter. Shame on Trustmark for really not putting any loan officers in those branches and making sure that they were actively not participating in redlining or possibly look like they were redlining. They should have done a better job at that. And then you kind of see how the feds saw a quick way to make a quick buck and put their head on their wall and say we took down Trustmark Bank. So it's a corrupt system, y'all. In my opinion, it's corrupt all around. So it is what it is. Take care of yourself, take care of your family, and know that there are a lot of good guys out there. There are people that do want to help you buy houses, or there is a system here set up to where you could actually, if you understand the game, you understand the rules, you know exactly what you need to do to put yourself in a good position financially, whether it's home ownership, investment wise. There's opportunity there certainly for you. Well, that is my time for today on today's topic. If you like today's content, if you like the video, give me a big thumbs up. I really do appreciate that. Also, I want to know if you believe that you were ever a victim of redlining, or you know somebody who was. Drop it in the comments section below. Definitely would love to hear your story or your friend's story and how that happened. Also, don't forget to subscribe so you can stay up to date on all the videos that get released. And last but not least, if you are in the process of wanting to restore your credit, wanting to get back on track, you've heard me say this many times before, credit is power. It does help you get yourself in a better financial situation, going from renting and throwing your money away in rent to home ownership, building equity, to getting investment properties, lowering your cost of living and interest rates and things like that. Credit can really empower you. And I get it. Sometimes you want to fix it, but you don't have the time. You don't want to hire someone to do it. You don't want to spend all that money to do it. No worries, no big deal. If you click on the link in my bio, there is information on how you can actually do it yourself. I do have a credit score blueprint course. All of the letter templates, all the training you need to repair your credit yourself like a pro is right at your fingertips. So everything we do in my company, the credit agents, I condense all of that down into a course where you can do it for yourself, take control of your own credit, repair your own credit, and do it completely on your own, no strings attached. So click on the link on the bio to learn more. Again, I'm Joe Chavarria. This has been another episode of the Joe Credit Show. I'll see you guys next time. Take care.